So let us start today's topic. Today the topic is harsh reality of trading. So let us see the contents. So we will see some chart patterns, and then will we see that how they are manipulated, and then how we can overcome those manipulations. And we will see about breakouts. They say about fake outs, and then we will see some questions if you have any. This is the 4-hour chart of Metropolis Health, and you see a perfect double bottom pattern, good volume also at the bottom if you see. And the first thing that we will do, we see that our eye light up and we will buy this. And some may even wait for the recently resistance turned into support, and we see again a pin bar, and this again confirms that this is a area of buying. So if now we buy this, but and keeping a stop loss maybe at the swing low, or some keep at the breakout bar. But after few days you see this that our stop loss gets hit, and the trader that who took the breakout trade now soon realizes that the things have reversed. And now as a part of revenge trading, they will sell this because now swing low is broken, and they will sell. But soon after few days you see again the top of that trade, I mean swing is again crossed. So now he see that there is a pattern that every time the top is crossed, the price reverse. And the first time when there was a breakout, the price reversed and broke the swing low. Then again, when he took the sell trade, the price again broke the top. Now after seeing a red candle at that, he kind of shorts this and expects that it will again break the swing low. But to his surprise, market this time makes a higher high and keeps on going up. So suppose this all this happens to you, and what is your initial judgment about this? So normally we will make judgment like technical analysis does not work. Your broker knows where the stop loss is kept, and all big institutes are after your stop loss. So now suppose if you're just starting your journey and this happens, so there will be losses, and you may leave trading as soon as this happens. So how these are the problems I think all of you must have gone through, and how can we overcome these challenges is the main topic of today's. So now in the same chart, now see, if you see the breakout part was, this was the candle that gave the double bottom pattern. But if you realize how market structure works, so you will see that market is actually correct and is in a corrective form in this part, and this is the major trend that is down. But this is a part that is a correction, and in that part you can see most of the fake outs that happen are in the corrective wave. Corrective and impulsive actually mean, impulse means that this is going in the trend, and correction means in going opposite to the trend. So main trend, if the main trend is down, you can see the correction will happen in the upside. And once this correction is over, that you will again get a follow-up move on the downside. So now if you know these market structures, so this is actually a wave. And now suppose in this case, if you label this as a wave A, and this is a triangle that gets formed in the B wave. So basically this is A, B, C, D, E. This is a triangle formed. And so the main point is that if you know that this is a correction to this impulsive wave, you will not take this breakout trade, because you are again expecting market to go down. And why are you expecting the market to go down? Because on the left side, if you see that there is an impulsive move, so for every impulse there will be a corrective move, and again there will be one more correction. So now again, now see, this is the part where he went short, but this is the last wave down, and now the structure is complete. So because for this impulse we got the next impulse, so our next we always trade the next wave. So next wave will be on the upside, because if you see on the left side, there is a wave going up. So on this side, you can see there was a follow up wave to the upside. So let us see this on real charts. Before moving further, now all of you may be part of our Telegram group, Stock Market for Beginners, and I think most of you are also joining our YouTube, that is with my name Sunny Dar. And all these patterns, actually we have already conducted one Elliott series, and in the for like this. So there are all, if you are new to our channel, there are 8 videos already conducted, which discusses more about these corrective patterns in depth. So we have covered all these corrective patterns. Once you learn them on the chart, so you will realize how these triangle, how these flats work, and how we can take the appropriate decision on this. So till now, apart from this, we have other series that is purely based on beginners. So if you're a beginner, we have already a series that covers most of the things that a beginner should know to get started. And after that, we have also one more series on demand and supply, that is purely demand zone and supply zone. So you can go and check that out. And this is one on the swing trade. So whatever is covered till now, is there any question on that, or we can move further? Because further is on the charts. So is any question till now on the topic that we have covered? So no questions, so I will move further. So now let us see the same chart on Metropolis that we now we now recently, actually now, since this is a swing trading, recently I gave some swing trading, like one was KNR Constructions. So I gave it at 2119. So let me explain how I picked this and what should you do to pick these stocks. Now I said for let me draw this. Now, I told that for every impulse, if there is a correction, we try to get the next impulse. Now, see, I gave this at 219, which was after the impulsive move. It gave a corrective move. So we always probability of a impulsive move is there. Now I gave it at 219 last week, and in 1 week you can see the high of 240. So almost 20 rupee move in a 200 range stock. It is almost 10% move in a single week. So the concept is that when you are swing trading, this is an hourly chart. Go for the see if a stock is making an impulsive move followed by a corrective move, then you can always wait for this move. And this was the only rationale behind this move. And I picked this stock just because of this. Now, let me give another example. So for similarly, you see that for the coming weeks, Amaraja Battery actually yesterday gave a big gap up. And now let me go back in history for a different stock. Now, Glenmark. You can see Glenmark also. You see the date is 19 June 20. So in 2020, this happened, that this gapped up, and after that you can see it reversed, to touch this demand zone again. This is a big gap up, so to fill the gap it went down, and after few months you can see it again, went to a new high. So now see, if you apply similar logic to a stock like Amara Raja Batteries, you can see in the coming days, if it kind of comes slowly back to this demand zone, and then we you can look for your buying setup here, and it may go up again. But this is just, see, assumption is that it should come slowly. First assumption is that, and then you have to look for a buy setup. But suppose, now let me what suppose this does not happen, and this has went up. Now it comes like this, or even breaks this. then you are not expecting it to go up and you will not trade this. So the concept is that if suppose this has gone up like this, then you will wait for it to form correctively, and this correction should come slowly like this. Like you see in this example, it went like up and down. It didn't break this also. So 100% retracement should also not come, and slowly, and here you can enter once you got the. Now see here also you can enter. Now let me give example of this. So you see this is an impulsive move followed by a correction. So you always expect one more move up. Now again at this point, you are again getting small correction. So you expect it to go up. Now at any time it didn't cross this point, it didn't cross this point. And see the difference. Impulse correction, impulse correction. Now see, again it gave a correction. So we again expect it to go up. So this is a one pattern that I have covered already. Let me. So this is an ending structure known as ending diagonal, and once you get this on a chart, it normally means that this uptrend has gone. It's now it may a trend reversal may happen, and of course after this you see the price immediately reversed. So again, now let us do the similar exercise on downtrend. You got an impulsive move down, again corrective move. So again you are expecting impulsive move down. So all this is actually correction, and again you can see after this you got down move. Again you can see let me correction down. So now see before for moving for to trade this part, you see from this part to this part it has went up impulsively, and then you can see this is a correction and followed by. So before moving up you have to see all this. Let me focus that part. Focus on this part. So whenever a stock is moving down, you have to wait for this to form. So if a stock is moving down, you have to first wait for this followed by this, and this part is important. Let This part is the most important part. Only enter in these kind of stocks. See, suppose you get this move and this breaks this again. So then this does not fulfill our criteria, because we have this should be less than this part. Then only you can expect this again up move. So is it clear? Any questions till now? Any
Sunny,
doubt?
can you show the structure of a long? I mean, the example you took was for down move. Can you show an up move also?
See, this is the part. See, this is a down moving stock, right?
Yes.
After at the bottom, see, you cannot. I mean, I cannot tell that this will keep on going up like this. But for trading this up move, this is a small up move, right? From this point to this
Yes.
point. So
Yes.
at the start, you see. Let me again. So at the start, you see. If I clear this. Now at the start, you see there was a trend line breakout here. Okay,
Yeah.
and after this, you got one move, and this immediately followed by a corrective move.
Yes.
So all this is a correction. So now this is our criteria, that without touching
Okay.
this we again entered for this move.
Okay. Okay. Okay.
I will take more stocks, but is this part clear? How to enter in a down trending stock?
Okay. So the next after your circle, the up move which is showing in the last arrow, that's an up move which is getting start in what is this Glenmark? Huh?
But this doesn't mean that it has to go up all the time. Now whatever we
Mm-hmm.
get next, suppose it has to go up, it will give a structure like this, and then we can trade this. Suppose
Okay.
instead of this, it it gives us like this and follows up by this. So what will it do? This is different structure. Like this will, we are now going in a different direction. Like
Correct, correct. So there was an impulse followed by again an impulse, then correction, and then again impulse
right.
down.
So this is a different structure. If it
Yes,
has to go up, it will form this structure. So yeah, this is actually, I mean, this is an Elliott wave concept, but not exactly Elliott wave, because now Elliott, what Elliott taught, that everything is, so suppose this impulsive move, what Elliott taught is that this is an impulse. If this is an impulsive move, it should be 5 wave. But now see, this is a daily chart, and you may not get 5 ways in this. Maybe it, so for our I mean, we use maybe a advanced or modified Elliott, that an impulsive move can be 1 wave, 2 wave, I mean 1 wave, 3 wave, or 5 wave, but a correction is always 3 wave, and minimum 3 waves. So now, so if you see this correction, this is let me zoom a little bit, and let us go to the 4-hour chart for this. Now internally 4 hours, you can see this up move followed by this correction. So this is again an impulsive move, right? So this impulsive move ends when, now you can draw this trend line, and this trend line broke this structure. So now you can see the correction started in this, and now again you got one down move followed by a correction. So you expected this again down move. This is basically the correction in this. And correction is basically 3 wave, minimum 3 wave. So if you label this as A, this as B, and this is C for this impulse. So for every impulse, there is a correction, and then we are expecting another impulse up. Is this part clear, or it was too fast?
no, no, clear. I think it's
For
makes
other,
sense now.
now because you have already been with the, for you have also seen that Elliott part, so that's why it is easy for you now.
Yeah.
But let me ask to the other participants if they are getting this, or let me explain this again. I mean, you have to speak up, then only I will know, otherwise I will continue.
Like how we will understand when it would be an impulse and when it would be a correction?
Okay. So whenever you're now suppose, so your question is when you understand this is an impulse or correction.
Yeah, yeah.
Okay. So basically, first step after this video, you have to watch that Elliott series. For every impulse, we have some rules. Like impulse, suppose this is the first. Now there is a trend line. So let me draw this. Now suppose there is a one trend line. Okay. So if you are thinking this is an impulse, this retracement should not retrace 100% of this move. So this is the first rule. Because impulse first, for every impulse, if we label this as 1, the second, the correction part should not be, I mean, retrace 100% of this first wave. So has it retraced 100%? No, it has not retraced, right?
Okay, so 100% is like you are comparing with the first one,
Right. So
right?
so let me, okay, let me erase this part. Now
Essentially, it should not cross the previous low.
yeah, so at this point now, only this much chart is available to us. So if you are making so what people normally do, that whenever they see a trend line breakout, they enter and think this is bullish, right? But it can also do like this after, even after the breakout. Many times it happens this. So what we look in the our structure is that after this move, are we getting a corrective structure or not? And corrective structure will be slow like this. It will be 3-way minimum. and it will not retrace back to this point 100%. So at this point, when after few days, let me go forward a bit. So you can see after few days, now this is a correction, and now you have to actually you can clearly see like this this is very fast. Like if you see this moment, this is very fast to go from this point to this point. It was very fast, and
Yeah.
after that you see like this, it is happening like this. So this is main definition of correction, that it is time taking, it is slow, and it is to the opposite side of trend. If trend is this, it is opposite side of that. So that is the part where we enter and we try to capture the next wave. So let me give more examples, but is this part clear or not?
Yeah, understood. Yeah.
Yeah, so there are other rules of impulses also, like this is the rule for second wave. So if this is the first wave and this is a second wave, the rule is that it should not again break this. And once it goes again above this, so this is the third wave. So for fourth wave, this should not cross this one again. So basically there should not be retest of this breakout again. It means this fourth wave should not touch the first wave. So if this is the first wave, the fourth wave should not touch the first wave. Is this point also clear?
Okay. Yeah, understood. Okay. So there would be any time duration for this, or we cannot predict that?
Time duration is like this. For now, suppose for every impulse, this correction, this part will take more time than this impulse. So if you see for moving for this part to this part, if it took around it took around 15 days, okay? So for this
Okay.
correction, it will take more than 15 days.
Okay.
And then this impulse will again, so likewise the impulse are fast. The correction on is a guideline that correction should be more time taking than this impulsive part.
Okay. So then they are telling no, some of the stocks they are in consolidation for these many months, like that they are telling no. So that is part of this, or that is different?
Yes, consolidating is actually correcting, but you have to see that when I mean before consolidation there should be this impulsive part only.
Okay, got your point. Okay.
Now there are other cases also. Suppose now when we say this is an impulsive part one, this correction should not go below this. But the metropolis example which we are showing earlier, in this you can see, if you consider this is an impulsive move, in this case you can see it slowly went and broke this also. So at this point we again our change our view that this is not an impulse, but this is a form of corrective wave only, because this has broken the 100% retracement. And in that case, AB, and this is a C wave, and after some time we will again get one impulsive move for downward. Let me again repeat this, because if this was an impulse, it should not break this, right? Like suppose in this case you see this breaking it, right? So it means that 100% retracement has been done. So which means now this cannot be 1 2 3 4 5, because for second wave the retracement should not be 100%. So that's why even if you are getting a double bottom breakout, we are again expecting it to go down. Why? Because this is just a corrective pattern for us now. Now let us see again this Amaraja case. Now you can see here, this part after this this part did not cross this part, right? So that's why you are expecting up move in this. Now for the future move, it all depends on what sort of structure we get here. We get a corrective structure, we are again expecting up move. But if you got something like this and then followed by corrective, then you will expect down move. So uh, I mean the main point is that if you are getting an impulsive move followed by a corrective move, then you are expecting uh, uh, one more down move. And reverse side, if you are expecting up move followed by a corrective move, you are again expecting up move. But anytime you see a different, you get a fast move followed by a fast move, then this is a different move. I mean, this is not an expected move. Then next time if you again get a corrective move, it means now you are expecting down move, because for every down move, if you get a corrective move, it will go down. So I will show this on the charts, but is this clear, the structure?
Yes, it means in Glenmark we can expect a more down move, and in case of Amar Raja we are expecting
No,
to
in case
an
of
up move.
Glenmark, are we getting a corrective move or are we getting a impulsive move? This is the chart of, right? So suppose this is Glenmark, this followed by a corrective move. Okay, so at this point, are we expecting up or down?
Up. No?
So we got
As
this.
per the theory, up to
Yeah.
this time,
So we got the
we
up
can
move.
expect an up move. No?
Okay, we got the up move. Now the next move, it depends on what we get next. If we get corrective move, what are we expecting?
G.
We are expecting
A corrective move.
no, I'm saying at this moment, I don't know what will happen. So I'm saying that after few days, if you get a corrective move, then as per theory, what will we expect then?
Up
After
move.
It
up
will be
move,
more up move.
right?
G.
But suppose after few days, instead of this corrective move, we got this move and followed by a corrective move.
Okay.
Then we will get a down move in this.
That more down move. We'll get more down move.
Uh,
Okay.
so let
But
me
it was in downtrend for a very long time. So
yeah
like this
so
uptrend also will take time.
so it depends on the time frame you are looking the waves. Now see, I also gave one example of I had shared this on the video also, that Bandhan Bank is in a corrective move. Let me draw that. See, is a weekly chart. There was an impulsive move and it went on in a corrective move. Now see, the correction lasted from Jan 21 to almost 16-17 months of correction, no movement at all. But for this for this down move, we were always expecting this down move, this part which we are getting now. So irrespective of what are the results, bad results, good results, long run, now at this point in December 20, we know that this impulsive part is over, and now for few years, now see the I mean significance of these structures. In January 21 last year, you knew that now for 2 years this stock will move downside. And now see this, apply this same on this down move followed by a corrective move, down move. See this, are you now seeing this structure? Any questions?
We have to
So
see
that's what I'm
charts
saying.
and train our
To
eyes.
again
Basically,
reach
yes, we
around
can see the
700. Take
Now
more
see,
time.
what I am expecting in this. We were expecting this correction, then this correction. Now we got this. Now next up move or down move depends on whether we will get a small correction, then more down move. Instead of this, no, see that no one can predict what will happen next. Now instead of this, if you got like this, even then you cannot predict. But if this follows up by a corrective move, then you know that this will go up. Now recently, see, let me give one more example. I had given this stock Godre Phillips in the group also. This was the Diwali pick, and around 1300 1400 level it was given. And see, in about only I mean 1 week or so, it has reached 1700 also. See, what is the logic? This is a weekly chart. This is an impulsive move, and this is followed by a corrective move. So you are already expecting this up move in this. Are you seeing this logic?
Yeah.
Now suppose instead of I got now next what, now suppose I want to make entry in this. So what should I do? I should wait for a corrective move in this. I cannot enter on I mean breakouts and all those things. I have to see after this impulsive move, am I getting a corrective move, or am I getting a different reversal? So we have 5 minutes. Now, most of these topics are actually already covered in the Elliott series, and I would recommend everyone who have not seen to watch that again and again. I think Kalpesh has already seen that, and I think he can share his experience.
Yeah, definitely. It's when we see the video, the confidence will get higher. I mean, whatever you have taken earlier.
Now let us see now on this PVR. Now let us apply what we have learned. Let me go to the daily chart. You see, this is a fast move. It followed up by a corrective move. So at this point, you are expecting down, right? Now you are again getting a slow move. So you are again expecting it to go down. Now suppose at this moment, now if you go to weekly, now suppose it does not, this is my assumption. So this does not mean that this will be correct all the time. Now suppose this goes like up, and then it goes like this, small correction. So you have to modify your view that now it is going up. So understand the difference between this. That once you make a view, you have to see whether that is happening or that something different is happening. So we have 4 minutes. Any other stock you want me to cover where you want me to do this, or that's over?
DMART.
Like, yeah, any stock we can expect up in the coming week, just for the sake of.
I will check and update. Like I have now, see this, you have got a big in Amaraja. You have got the first part done, impulse. Now in this part, if you get a corrective move, then definitely you will get one more up move. The reasons, let me give more reasons. Now see, now check the MACD also. You see, this is now momentum is more at this point to this point. So it means this up move has good momentum. But suppose we don't get this, important part in this is that we should get the corrective structure in this now. Then in this case, you will get the next move. Instead of this corrective part, if you get an impulsive move down, then this structure, see in on hindsight, no one can tell which, but once this structure gets formed, then you can tell. So for most stocks, I have to scan and update like this. Now let us see this DMART. So you got this down move, followed by corrective move, again down move. You got this up move, followed by this corrective move, again up move. You got this small correction, up move. Now you are getting this, followed by a small move. So what are you expecting?
It to fall below.
It will go more down.
It
Right.
will go down.
Right. But you have to always
And
look.
there will be three to this.
But you have to always see what is the higher chart saying. Now, if you see weekly chart, this is just up move followed by a corrective move. So what are we expecting?
Up move.
Up move.
But again, let us
Actually,
go.
it does not.
Now let us go to this monthly chart. You had this down move followed. If this is a corrective move, what are you expecting?
More down.
To be raised more.
But now see the possibilities there. But you have to, now suppose it does not go correctively and it goes up like this, then this assumption is wrong. But if this goes correctively, and in the coming weeks, months, you will see that whether it is corrective or impulsive, then you are expecting more down. So this is how from a higher chart you are making analysis. So I think we should stop